Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
In our studios in Hong Kong is Julia Wang, Executive Director and Global Market Strategist at JPMorgan Private Bank. To take a closer look at markets, we mentioned that we saw a lot of selling today. So, Julia, at the moment, geopolitics and higher rates and possibly the Fed not doing what we thought it might do, they're sort of carrying the day. But earnings are nigh. Will that change things? And does JPMorgan Asset or Private Bank see this as a good dip to buy?
Thanks for having me. So I think that, you're absolutely right that over the long run, earnings growth mattered more for the equity market. And we don't really see that being a hurdle for equities. In fact, we do think that the equity market is exiting what we call a rolling earnings recession. And there are more sectors poised to see positive earning growth this year. So we do think that from an earnings perspective, it's actually bottoming out. And there are more expansion ahead for the equity market. So that is our medium to longer term view. So we do think that the geopolitical worries, this back and forth in terms of Fed rate cut expectations are sort of near-term hurdles that the market will have to get through. It could take a few more weeks, or if not a few more months. So I think that, for investors who are looking to, embrace the next technology wave in terms of artificial intelligence, who are looking to position for longer term secular growth, both in technology as well as in sectors like healthcare, we do advocate, starting to build positions as the market pullback. But just be mindful that, these are volatilities that the market will have to go through. And there could be periods of volatility ahead as well.
Julia, I know you as a pretty astute economist. Later today for China, we're going to get the monthly activity data. Retail sales is going to be very important in terms of trying to get a sense of where the Chinese consumer is right now. Can you offer some insight?
Well, the Chinese consumers are probably still, rather cautious. I do think that there have been some marginal evidence that, they've been saving less and spending a bit more. But that's on the back of a significant accumulation of savings last couple of years. So I think it's a very slow bottoming out process. I think, if we zoom out into the broader issues, there really is a lack of confidence, which is weighing on demand. And so we talk about the Chinese economy at the moment as being rather imbalanced. There's more supply than there is demand. The manufacturing, production, everything is still reasonably good. And that's why I think some of the indicators that tend to reflect or pick up on these things more, like GDP, like industrial production, like investment, this will continue to be quite good. But there is really a dearth of demand, and that's because confidence is still quite low. So we do need to see that kind of pick up before we can see a more balanced recovery.
So not so bullish on China. Perhaps we could call that neutral on China at the moment, but you continue to like Japan. Japan has had a good run, and people were buying on yen weakness for a long time. But now we've got real yen weakness and dollar strength, and they're not buying. Why?
No, I think if you look at investor positions, there are still many investors are short yen. They're borrowing in yen and they're buying Japanese assets. So I think that actually there is a decent chunk of position in that. I do think that when we talk about the near term, it's worth remembering just how far we've come in terms of dollar yen. Right? We were much lower in terms of the level just a couple of months ago. So I do think that some of the structural factors driving yen weakness are better understood now. So such as interest rate differential, such as the fact that Japan's trade deficit looks to be persisting. So as these become better understood, and in the face of all these geopolitical tension and dollar spike, I think it's reasonable to expect that the government might try to intervene, and that's why we also don't advocate taking a speculative position to be short yen at this point. But from a longer term perspective, I think yen is still going to be a carry currency.
We had a portfolio manager we quoted in the Bloomberg story today from over at T. Rowe Price saying that the yen will continue to drop, maybe another 10%. to levels not seen since the 1990s. And he really points the finger at the Bank of Japan and the BOJ being reluctant to raise rates in a significant fashion. Does this particular person have a point right now that there is so much conservative thinking at the BOJ that we could see even more yen weakness?
So I think that, he has a point in terms of the structural factors driving yen weakness, which I also agree with, and I don't think that will reverse anytime soon. I don't, however, think necessarily that the BOJ is the real culprit of it, because I think that they are justified in thinking about inflation not only as a cyclical problem, but as a structural problem for Japan. Japan hasn't had inflation for 20, 30 years. So, if you think about an average inflation target, they have a long way to catch up. So I think it's justified for them to take a more longer-term approach as they try to engineer this return to reflation story and overlook a little bit of the near-term inflation squeeze. And because ultimately what matters is whether the economy can move to a new equilibrium in terms of productivity growth. And that takes time and some patience, some patience from the central bank.
One quick call on inflation in the U.S. UBS strategists are saying that the Fed hiking rates to 6.5% is a real risk. Can you see that?
We don't see that happening. I think that the main difference between now and 2022 is that Fed fund rate is at 5.3. PCE is running at 2.8%. So the gap in terms of real rate is already 250 basis points. So even if inflation becomes sticky at this level, even if there are some bumps in the road, there's a decent buffer for in terms of real rate. The Fed doesn't have to hike again.
Absolutely. Yeah, Julia, thank you so much for joining us. Julia Wang, Executive Director at JPMorgan Private Bank. Closer look at Apple now. Apple's iPhone shipments slid nearly 10% last quarter. It was the steepest drop in sales for Apple since the pandemic. Joining us now is Vlad Savov, Bloomberg Tech Editor, to discuss this further. A while back, Vlad, we had Apple sales in China down about a third, but then all smartphones were down a third. But that's not the case here. Here you have overall global sales, Apple shipments down nearly 10% last quarter. And for the rest of the industry, you had a gain of 7.8%. What has gone wrong at Apple?
Well, it's an interesting question. One way to look at it is it may be a cyclical matter that just runs over many years. When you look back to the pandemic, the iPhone was actually the most resilient smartphone among any. So when we had, especially in China, the world's biggest smartphone market is the one I keep the closest eye on, Android rivals to the iPhone were down double digits every single month for over a year, whereas the iPhone was rather sustaining its momentum. Now the trend has reversed, and there are a number of reasons for this. I mean, one of them is when Huawei was hit with sanctions, everyone else in the Chinese market invested really heavily, bought a lot of inventory, semiconductors, etc. They wanted to grab that Huawei market share, and they did to a great extent. But they did overspend. They had a glut of inventory, which took months to clear. So now those exact companies, because of their aggressive pricing to shift that inventory, are now coming back and ramping up their shipments. So just in relative terms, that's why they're on the up. Whereas Apple, because it has been sustaining things, maybe, as I say, it has a bit more of a down cycle at the moment. That's, let's say, the positive, the upbeat way to look at it from Apple's perspective.
Yeah, we're citing data here from the market tracker IDC in terms of first quarter growth. One of the things that I was just stupefied by, Transsion. I hadn't even heard of this company. Shipments were up 85%. And when I did a little bit of research, I guess Transsion sells heavily into African markets. Is that right?
That's right. It's very much a budget-oriented company. It has several brands, which even if I record them at the moment, I'll forget them in a minute. I mean, I'm being a bit dismissive, but the company does a good job. This is the other thing. Just because you're a budget-oriented company, that doesn't mean that it doesn't take a lot of expertise and operational efficiency to make that work. Not everybody does it. Not everybody turns a profit, and that company is doing it. It's now number 4 in the world. Oppo, which is one of the big brands over here in China, it's kind of been slumping. Whereas Xiaomi, on the other hand, it has rebounded. Xiaomi is a really interesting company because its co-founder Lei Jun has dedicated all his attention to the EV project, which has boosted its share price, whereas the smartphone companies actually rebounding just as well.
He's really adding to the difficulties of other EV makers in China. I don't want to go that direction. I want to go back to Apple because that's the focus of this discussion, Vlad. And Apple, has never really been first in a lot of things, but it eventually got there by extremely good quality in its output. And so it brings to mind AI. So you've had Google and Microsoft and other companies like NVIDIA and Broadcom and others really take advantage of making announcements and getting started on artificial intelligence, not so much Apple. But now you have the WWDC coming in June. Is that going to be the beginning of a new push for Apple to the upside?
Well, it's the beginning of their AI story, shall we say, or let's say the reboot of it, because Apple's Siri digital assistant is supposed to be some version of AI. But again, what we refer to as AI today is the generative AI, the ChatGPT class. So Apple really hasn't given the world a narrative around that. It has had, again, a rally in its share price just because there was indication that it's integrating more AI processing in its chip. Tim Cook has spoken repeatedly saying AI is going to be a priority, but our own reporting at Bloomberg says that Apple is looking to contract Google for its Gemini AI model for the coming generation of iPhones. It is fair to say that Apple has been caught flat-footed. It's playing catch-up. Just as you said, Brian, there were smartphones many, many years before the iPhone, and then the iPhone came in and it set the standard. It defined what a smartphone is for all of us today. So absolutely no reason to rule Apple out, but it is the case that the company is playing catch-up, and it needs to show some evidence that it's closing the gap in June.
Well, they're doing some business in India. We know that, right? The last figure that we had for Apple sales in India was pretty strong.
Yeah, absolutely. And the other thing that Apple is doing is shifting its iPhone manufacturing to India. That doubled this past fiscal year, ending in March, and it had tripled the previous one. So India, in the space of a couple of years, has gone from just a percentage of iPhone manufacturing to 14%. And as I mentioned, because the iPhone has been so steady, one way to call it is steady, the other way to call it is stagnant. It's very easy to say all this manufacturing has gone out of China to go into India. It isn't additional to manufacturing in China.
So Tim Cook spent a lot of time in China here just recently. I'm wondering whether or not that's a kind of push to reinforce among Chinese officials that Apple's here to stay in China.
Literally. That's something that he literally put out there. He declared his love for China on his most recent trip. He has been on 3 public visits to the country in the past year. It's increasingly common for him to be in China. It's supposed to be reassuring. One way to read it is the other way, because if you're really sure in something, you don't need to go and attend to it on such a regular basis.
I guess he was just in Hanoi as well, or maybe he's still in Vietnam, and so that's another manufacturing site for them that they want to be able to fortify?
Yeah, I think he should just hang out in Asia and just not bother coming back to the US. It's a busy time, and yes, he's hanging out with influencers and YouTubers in Vietnam, and there is the prospect for him to announce fresh investments in there as well.
All right, Vlad, out of time, unfortunately, but a great session. Thank you. Vlad Savov, Bloomberg Tech Editor.
Let's go to Tesla next. The company is cutting more than 10% of its workforce. That's roughly 14,000 jobs. Let's take a look under the hood. I know, I couldn't resist. With our own Ed Ludlow, co-host of Bloomberg Technology. Ed's joining us from San Francisco. Is this something more than a company that is struggling with softer demand?
I think it is something more than that. It's been a long day, long night. It's been a long 24 hours. But, something you said there, more than 10%, it kind of got lost in the kind of cadence of headlines that we broke. But what I'm hearing now is that the cuts in certain teams is a lot deeper than 10%. In many cases, it's nearer to 20%. And as we reported, it seems to be largely coincidental timing. But there were 2 very prominent executives at Tesla that handed in their resignation last night. And they would have known full well these cuts were coming. So, and I think the stock closed down more than 5%. So there's a lot there.
We're journalists, so we like to have a certain sobriety, but then we're radio hosts, and so we like to stir things up a little bit. So let me put it to you this way. This is not necessarily throwing in the white towel. It's not really the tail between the legs, but it is the year of efficiency for Tesla. Is that right?
Yeah, that's a really good way of putting it. Look, oftentimes in the world of technology, when a company announces big layoffs, it's never pleasant to talk about people losing their jobs, but you'll see the stock go up, and you'll see the stock go up because investors see it as a sign of cost discipline, and obviously reducing your cost base has impact on the bottom line. This time, Tesla shares were down 5%, and very much this time, it's kind of a compounding effect of negative headlines that we've had. In the first quarter, Tesla missed deliveries by a very big margin. The data suggests that Tesla is facing increasing competition from domestic players in China. So cutting this deeply with the added negative headline that Drew Baglino, who has been at that company for 18 years and was one of only 4 named executive officers on Tesla's management team, that he resigned and there's deep layoffs, I think it just added to a downward trend that this company and literally its stock has seen so far in 2024.
So, Ed, how is this going to impact the product line right now? Do we know that?
Yeah, in reading the memo that Elon Musk sent to employees around the world last night, he's attributing the need to cut staff to there are people in duplicate roles because they grew too fast, but also productivity and cost discipline. And as you guys know, Tesla's narrative right now is it's between 2 waves of growth. Wave 1 has been and gone, driven by Model 3 and Model Y. And Wave 2, we're a little bit confused about, but it's either a $25,000 EV or it's a robo-taxi, depending on whether Elon Musk is right or Reuters that reported the $25,000 EV was dead last week. And, amid losing some pretty important intellectual capital in those executive departures, I think Elon's just trying to rein it in. What I'm hearing is that he's kind of clearing house and making sure that he has the people in place that he wants to get this next phase of growth going.
Ed, as I heard you say in an interview more than a year or two ago, that Elon Musk is the wildcard man. Should we doubt him? I mean, Mark Zuckerberg pulled it off, didn't he, at Meta? Is this a big challenge now that Elon Musk will embrace, and he will get this company more efficient and more profitable?
Yeah, I mean, I talked about this on air, and I wrote about it in my column today as well on Tech Daily, that there are times where Elon Musk is just consistent, and this, in terms of layoffs, is one area that Musk is consistent. He did it in 2022, where they cut around 10% of staff. He's talked about the impact of rates on demand presently, and he's always had this mantra that the leaders of each business unit should be aggressive in pursuing cost savings, basically. He says to all of them, get me cents off the dollar on every component, shave cost out of every process. And he's always done that. And this is him doing it again. The difference is that, he's got a lot else going on. He's the CEO or leader of 5 other companies. And it's just disconcerting when 2 big name executives that are highly competent leave the company at the same time. So this time, I think investors and Tesla shareholders and Tesla owners as well are basically trying to wade through it and go, is the net result that Elon's got this or not?
Well, that goes to the next question. I mean, if he spread himself too thinly, do we need to see him kind of remain more laser focused on the Tesla problem at the exclusion of some of the other things he's got his hands in?
Yeah. To the root of your previous question, there is an element of Keyman risk. Tesla now literally puts it in its regulatory filings that if anything were to happen to Elon Musk, horrible to say, but easiest example for our global audience, if Elon Musk were to be hit by a bus, Tesla would have a problem. And that's me paraphrasing. And again, it goes back to when Drew Baglino resigned, or, he announced he'd left Tesla, but a source told me he resigned rather than he was fired. A lot of people thought Drew might be next in line, potentially to be CEO. He'd done 18 years at Tesla. He leads all energy and powertrain activities at the company, or he did until last night. So with him out the running, there's now only 3 named executive officers, including Musk. And you wonder, if he ever turned around and said, I'm done with Tesla for now. I'm moving on to something else, who that person might be.
Ed, just in 20 seconds or so, does this mean lower prices across the board for EVs? And does this bring in viability? How viable are these companies?
Well, the answer is no. I don't think if you see job cuts and other ways to save money that you'll continue to see price drops. I think they've cut as deep as they can, but you never know. They've not been afraid to use price changes as a lever.
Yeah, so far this year, the stock is down 35%. Talk about price cuts. Ed, it's always a pleasure. Thank you very much for making time to chat with us. Bloomberg's Ed Ludlow, co-host of Bloomberg Technology on the Tesla story, shares today in the regular session down 5.6%.
This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.